Hello traders, it is Wednesday, July 3rd, and it's time for my weekly video. Unfortunately today I'm going to be delivering it with a very heavy heart. My sister-in-law Brenda passed from pancreatic cancer, and my niece and nephew are now parentless. My brother-in-law, my college roommate, my friend Art passed from melanoma cancer 11 years ago, and we are trying to rally around these two magnificent youngsters who've put their life on hold for the last 7 months to help their mom with her final journey. I've launched a GoFundMe page, and I will have the link in the copy for this video that I'm posting on YouTube, and I hope that you'll find it in your heart to donate some money to them as they try to restart their lives. Hopefully, ideally, the money that you'll make off of my trade ideas today will help offset your generous donation. Thank you in advance. So, let's take a look at what the market is currently doing. I'm going to put up a chart of the S&P 500, and here we can see that the market pulled back after breaking out to a new all-time high. We had 5 consecutive down days after that breakout, which is a fairly weak sign. The G20 meeting was what everyone was waiting for. The fact that President Trump and Xi decided to resume trade negotiations fueled this rally that once again broke us out to a new high. Today, on extremely light volume and a shortened trading day, the market is moving higher. I view this as a fluffy move. Market has a tendency to rally into holidays, but you can see it opened on the low, closed on the high, and it has broken out to a new high. So this chart looks pretty good if you just look at this bar, but you have to put it into context. So we are going to assume that this breakout is going to hold and that this rally is going to continue into earnings season. The bid is usually very strong during the first 2 weeks of earnings, and that's because mega cap tech stocks have fueled the rallies, and until they announce, Apple being the last one to announce, the market tends to move higher. So the momentum points higher right now. I need to place one caveat on today's trades. We are going to be focusing on the bullish side. This was the prior high. That is the breakout right there. So for simplicity, let's call that level SPY 295. If the market trades below SPY 295, any long position that you're in should be closed down. Another failure would simply validate the resistance here. And with a breakout like that, a failure would make this a buying climax, and you need to get out of the way. So market first, market first, market first. I cannot emphasize that enough. Global economic conditions are deteriorating. That's pushing bond yields lower, and bond yields are so low right now that they do not keep pace with inflation. So investors are being grudgingly pushed out on the risk curve, and that is fueling some of this rally. But we need to be particularly careful because any breakdown here could very quickly reverse as macroeconomic conditions continue to deteriorate. So we're going to assume that the rally will continue. We're going to have our market stop at SPY 295, and this stop is independent of what I show you for each individual stock. So you will have 2 stops. One will be market based, one will be stock based. So I like to start off my weekly videos with a recap of the prior trades. We had a binary event, the G20, coming up, so there was a lot of uncertainty a week ago. We didn't know how that meeting would play out. Now we know, broke out, a little bit of follow through here. So I only gave you 2 picks last week, and I told you this was a very low probability trading environment. If the S&P 500 after the G20 meeting were heading lower, DHI was a short we were looking at. There's the video, there's what it did the next day, but we didn't have a market breakdown. So there would have been no trade, and in fact we would have had to wait a couple of days for that to happen, and we needed to be below that horizontal support level at 42.50. So no trade. That was our short. Our long did not perform well, but you should have been able to stay out of that long position because we've got Wednesday, Tuesday, Monday, Friday, Thursday. This was the first opportunity to get into the trade, and one of the caveats was we wanted to be long as that 142 breakout right here held. There was the breakout. We wanted it to hold. It did not. So as the stock would continue to drop, we would not enter that trade. Now I will say one thing, J&J should still be on your list. I like the stock here. It's a choppy one, but a breakout above this level would be a nice buying opportunity. So if it closes above 142, take a long position and use that 142 as your stop. But let's take a look and see if we can find some other better opportunities that aren't this choppy. So I'm going to go into one of our canned searches that I like to use, which is Pop Bull. The market was up today, so we have lots of candidates to click through. Now I'm going to try and find a candidate that I like, and then I'm going to show you exactly what I look for. This is not a bad breakout right here, but I can't buy into a massive move like that. So that would not be a good candidate. The stock has broken through horizontal resistance. We've got another nice little breakout here. A little gappy, which tells me that the liquidity may not be very good in this stock. Here we've got a lot of chop back and forth. Finally a breakout. Not a bad candidate, but too much chop. I like nice, tight trading patterns. Now, Tesla is kind of a wild stock, but it does trend very well. Here we've got a bounce off of the low. We've got a breakout through horizontal resistance. And let's put up some moving averages. I'm going to click on simple moving average. I'm going to overlay the 200-day, the 100-day, and the 50-day. Toggle on, toggle off. We've gotten through the 50-day. The 100-day will provide a little bit of resistance at that 255 level, but we're at 235 right now, so we've got 20 points of upside. I like this stock. Anytime we buy one of these little mini breakouts, we use that horizontal resistance previously, which is now support, as our stop. So the way that you would trade this is you would place your stop right at this level here. So we want this level to hold. It has to hold. If it is breached, there's a likelihood that the stock will fall back and start testing that low again. So we need this to hold, and we need to see the stock grind higher. The company did have positive news today. They had a great production milestone that they reached, and so stock's got some excitement once again. I don't know that this will be our bullish pick, but I do like the price action. I wish that it would have opened on the low today and closed on the high today, resulting in a green bar, especially when that's what the market did. So the fact that it opened on its high and drifted lower makes it a little bit suspicious to me. So I'm just going to be clicking. But here's an example of what the type of stock that I like. Nice, tight, 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 orderly trading pattern. Stock gaps up, drift, drift, drift lower. No surprises, no choppiness, nice gradual move. I do like this. It's riding that 50-day moving average, and then boom, we get a nice breakout here. We had big volume 4 days ago. I'm going to overlay one of my indicators, 10SI. And I'm using Option Stalker to find these opportunities in the searches within the platform that help us do this. Great for swing trading, which is what we're looking for. We're looking for trades that have maybe a week to 2 weeks to run. Above the orange line represents relative strength. So you can see how the stock has broken out, closed on its high of the day. I like this stock. So I'm going to simply note it, and it may be one of the stocks that we consider for a long position. Not looking for short positions right now with the market breakout, but again, I want to emphasize that as I start clicking through charts, this is the nice tight orderly pattern I'm looking for. If I see a choppy stock, I'm going to tell you, and we're going to just bypass it. Choppy, choppy, choppy. Got pretty big resistance it needs to get through. Because we want to plow through this list, and that's what you need to be able to do on a daily basis. This shouldn't take you more than 5 minutes to knock through this list, and you'll probably find 2 or 3 excellent candidates just because of the nature of the search that I conduct and the criteria that I'm looking for. So you can see this breakout here, not bad, pretty choppy stock. We can find better. Gappy, not too bad. Not so much choppy, but it spends a lot of time compressing in ranges, but this is a nice little breakout. AYX is the symbol. So we keep going down the list here and see what else we can find. ABC, not bad. For those of you that like to bottom fish, this is a nice little stock to consider. You can see that the stock is forming a base, and after a big fall, stocks do need to spend a lot of time forming that base. It's above the 50-day moving average, lots of room to the 100-day. Nice little breakout through horizontal resistance today during a quiet market day. I would say that to consider this, you need to make sure that it's got follow through the next day. So I'll put it on the list, but I don't know that that's going to be one that we consider. Not a bad trending stock. Nice uptrend, little choppy, nice downtrend here. Nice breakout. We're through the 100-day and the 50-day moving averages. Pretty good. The market is still open and my list just changed, so if you're wondering why, but we are just about to close here in another 20 minutes. So I'm just continuing to click through, looking for that really nice opportunity. This is good. This is AIG. Little bit choppy, spend some time in the range, but that's a good little breakout. I would like to try and buy that around that $54 level right there where it opened today. So I wouldn't chase it. It chops around, so I think there might be an opportunity to scoop this stock on any kind of little market dip, and I like it a lot better right at this level. And the reason that this approach works so well is, number one, we're looking for relative strength, which the stock has, but number two, because we're buying a breakout, our support level is very close at hand, and we want that breakout to fuel a sustained move. If that sustained move does not materialize and the stock retraces, our stop is very close to the current price, so our downside risk is very contained while our upside is potentially limitless. This is nice. Procter & Gamble rallies up, spends a little time compressing, rallies up, spends a little time compressing. I believe this move higher is going to fuel the next leg of the rally. It is a consumer stock, a defensive stock in many respects, so you would not need to chase it. I believe this 112.50 level right at that breakout right there is going to be a nice entry point. So I would be bidding for the stock at 112.50, and then I would use a close below that open right there at 112. So if the stock closes below 112, then you need to get out, because that support has failed and the stock may be retracing. But it has a tendency after compressing and after a breakout to follow through for at least a few days. So PG is going to make the list. That's a definite. This is a nice trend lower, get pretty choppy through the 100-day moving average, good relative strength. This is not a bad candidate. AES, this is a utility stock, so it's not going to move a whole lot. NRG, utility stock. So I'm going to avoid those and keep looking for something that might have a little bit better momentum. So a nice little breakout. Could come in and fill this gap right here. It's in the gap above the 50-day, 100-day, 200-day moving averages. PTC, PAR Technology, not bad. Put that on the list. But again, I don't think it's going to make it. I want to give you a couple of really high probability trades that I think are going to work out, and I don't want to go out on a limb today. Again, I'm dedicating this video to my sister Brenda, and I want to make sure that you're able to get into some nice high probability consistent trades. SNE, really nice breakout, but it's an ADR, so it's very choppy. Pretty nice little breakout through the 100-day moving average. Cigna, CI, health insurance, not bad. Not bad. Take a quick zoom out. You can see the longer term chart here. We've got a double bottom, higher low, bottom, retrace, higher low, rally, horizontal breakout. Actually a little head and shoulders. Shoulder 1, there's the head. Shoulder 2, neckline, breakout, 100-day moving average. I like it. I think this is going to be a good one. Goes on the list. This is actually pretty nice. Nice compression in here. Big breakout. Stock holds all the gains from that earnings breakout and then gradually moves higher. Little retracement, boom. Each one of these little retracements like this fuels the next move. Little retracement fuels the next move. Little retracement fuels the next move. Nice breakout here. That's a nice stock. CNF. I like the nice tight orderly pattern there. Getting some updates right now, so I have to be careful not to dupe any of these symbols and to just be able to click through these. Nice tight pattern, good horizontal breakout. This is Merck, not a very fast mover. Now I'm just going to be clicking. I've got a couple that I know we want to take a look at, and until I spot something I really like, I'm just going to keep going through here. UL, not bad. That is also an ADR. Nice breakout there. Another consumer stock. You can see money starting to rotate into defensive issues like utility stocks and consumer stocks. This is very tight, very nice breakout here. I like this actually. This is very nice. Really tight pattern. Nice breakout in here. Good movement today. BAH. We don't often get so many stocks on the list, but because the market's been up the last couple of days and because the market is breaking out to a new high, we are seeing some good candidates. This is nice. MSI, very, very nice. Compression, horizontal breakout, nice trend here, all following earnings. Big move up, retracement, move up, retracement, move up. So this is a nice candidate. I'm just looking for candidates right now because when I finally get my list, then I'm going to go through and devise a game plan for each one for you. And I've already got enough stocks to consider, so don't really need to look any further. And some of these are dupes because the update has come through, and I'm just going to go to the very bottom here Amazon, see if there are any stocks that are a little bit more liquid that I can focus on. DHR, that's nice. Danaher. Okay, we've pretty much gone through this list. Travelers has been highlighted in prior weeks. Just super, super strong channel here. Draw a line across the tops, draw a line across the bottoms. You can see how it's been in a nice steady uptrend breakout today. So this stock is a nice candidate, but given its pattern, buy a little dip and you'll be in great shape. So let's do one more search. We're going to do a custom search, keep it easy. I'm going to look for good option liquidity. We're going to use option liquidity greater than 3. We're going to use a stock that's above the prior day's high. We're going to be looking for a stock that has heavy volume. And let's see what that brings up first of all. Okay, we've got a fair number of candidates to click through here. And let's see if there's any other filter that I care to use. Well, just looking at this list, you can go through and you can see BHC. Let's see, what were the stocks that we highlighted here? We had Merck, Procter & Gamble. I think we look at Starbucks. Let's just go through the list. I'm going to move this list off screen, and then I'm just going to start clicking through. Same thing that I did earlier, and I'll let you know when I see something I like. This is AMRN, and I'm going to zoom out. You can see fairly choppy, but trying to get through this all-time high right here could be a good candidate. I know we day traded it successfully today, but we're going to take a pass on that. AXP, little choppy, but moving higher. ConAgra, no thanks. CLF. Just looking to see if there's anything that catches my eye here. On a stock like GPS that's been absolutely pounded, that's formed a base here, what you'd want to do is click GTC, drop your alert line there. If it can get through this, it starts to fill in that gap and it might go higher. So there's no trade there for us now. But since we just spotted it, why not set that alert? McDonald's, that's nice. Compression, little pullback, breakout. Compression, breakout. Again, the stocks that we're noticing right now are kind of a flight to safety, which makes me question the overall market strength. There's P&G again, Philip Morris, Starbucks, nice, tight, rally, pullback, boom, compression, breakout. You don't have to chase stocks like McDonald's or Starbucks or Procter & Gamble. They don't have massive moves. These are well-established companies, and they will provide you with a better entry point than this. You just have to be a bidder when the stock starts to pull back. And for McDonald's, somewhere around this 86.40 level would be a nice entry point. But again, we're going to cover that in a few minutes when I decide what my final list is. I do like that Tesla breakout, but that's going to come with a caveat. Pretty nice. Okay, so we've got plenty of stocks to consider for this week's list. So now what I'm going to do is I'm going to go in and I'm going to create a new list. And I'm going to name it July 3rd. And then we're going to go in and we're going to add some symbols. And then we'll go through and we'll look at each one of those symbols and we'll narrow down to what I believe are the best 3 or 4 candidates, and I'll outline a game plan for each one of these. Again, without having to rehash all of this, any long position that you take is contingent on the SPY staying above that 295 level. We need to close above that 295 level. If we close below it, it means that there's trouble ahead and we need to step aside. You also know that for these stocks, the game plan is to buy a breakout and to use that breakout level as our support and as our stop. AIG, not a lot of traction, not a lot of momentum recently. Still got to get through this high right here. So I'm going to right click on it. And I'm going to remove symbol. Not interested. AYX looks really good, kind of choppy though. I don't think that's our guy either. I like that though. Any of these that I'm removing could very well work out. I like it. It's just not the one. This is nice. I'm going to keep this. It's not a fast mover. You can see how it took to get from $60 to $67 has taken about a month and a half. So it does move, and it's got a very, very powerful uptrend here. So let's outline the game plan here. That did not have a massive breakout, so I don't feel that we're overpaying for this stock. So provided that the market is strong Friday, we have an unemployment report that's coming out. I do not believe that unemployment report is going to generate much of a move one way or the other. If the number comes out very weak, say below 140,000, I believe that traders are going to rationalize that this simply puts the Fed one step closer to easing. It's one of those crazy bad news is good news events right now. So the market is pricing in 3 rate cuts by year end. I don't think the Fed gets anywhere near that unless we have a big market drop. So I don't think Friday's report is going to matter, but you will be able to see if the stock is having a little bit of follow through. That would be your sign that you want to enter the trade. You don't want to pay anything more than where it closed today. Try and get in very close, within 10 or 15 cents of where it closed today. Not a fast mover. Should give you plenty of opportunity to get in better than 67.50, and our stop will be right, let's call that high right there. 66.50 is your stop. So 66.50 is the stop. This is one of the alerts. I'm going to just close it down. Those explosion alerts are for massive moves that are taking place. I really like CI. This is a nice little breakout here above this 100-day moving average. We're not overpaying too much for it because it opened above that high. So we had a nice little breakout for the open, and then it just kind of crept higher with the market. So we like it at this 164.50 level, and we're going to use a close, give us a little room, not the 100-day moving average, but we'll use this open right here. And let's call that 162 stop on a closing basis. So if the stock closes below 162, you're out. But you're going to be trying to buy the stock anywhere in this level. We want to make sure we're above that 100-day level, 100-day moving average level. That is our stop. It's got really nice upside, lots of room to that 200-day moving average. So that stays on the list. CNF, too choppy. Move that. THR, nice breakout, nice head of steam. Not bad. Just not. It's a little extended in here after a big compression. This could really work out. I'm just trying to narrow the list, and that's just not one of my favorites. MCD, I like this. I like the breakout. Again, it's not a huge mover. I'd love to try and buy it at 210, which is above that opening right there. This is our ultimate stop out point right here, because that is actually the breakout at about that 207 level. If we were to take a position in this, it keeps us with a fairly wide stop. And I don't know that I want to have a wide stop right now in this market. So I'm going to leave McDonald's up right now and see if we can find one or two other better stocks. See, on a stock like this that's just breaking out right now, nice upward movement, we can keep our stop very tight because we would use that open right there as our stop. So I like MSI. PG looks good also. Probably have a chance to buy it right in here around the 112 level. So I like it right in there because we can keep our stop nice and tight. I like the fact that we've had a nice horizontal breakout, a little compression, and then a move higher. But this stock does tend to chop a little bit, so you get a little breakout and a fairly decent sized pullback here, and then another move higher. It's got good relative strength, so we're good on all those accounts. Too choppy, we're taking that symbol off. I do like SBGI. Nice gap higher, pulls back, it tests that breakout. You see how that works? All these support and resistance levels, they work. So it pulls back and now it's riding that 50-day moving average, and then we finally get a nice pop higher. So on moves like this where you get the opening gap, there are some profit takers who say, hey, you know what? Look at this stock. It's gone higher. Now it surges to this level. I'm going to take some chips off the table. So you get this gradual decline until people who supported the stock here on that initial news say, this is where I started buying it. I am a buyer here once again. And the stock finds that support. And now the buyers are in. Stock gets ahead of itself. Now it pulls back to where there are many interested buyers, starts riding that 50-day moving average, good relative strength. I really like this stock. SBGI definitely stays on the list. SNH, a little bit of a safe play in that we've got this little pop through this horizontal resistance. It's a fairly cheap stock. It's been in trouble, so it may languish for a while before it gains traction. You'd kind of like to see a boom, boom, boom higher 3 days with green candles. We've got two. We'd like to see maybe another one or two, and then it would be of greater interest. So I would put SNH on your list. This is a real estate investment trust, a REIT, and REITs and utilities have been doing well in this environment with interest rates going lower and lower and a flight to safety. So the internals for the company, the fundamentals may not be that strong, and that's why the stock has been selling off, but the sector is doing well, and that's fueling the stock higher. So I'm going to remove this. I'm not a big fan of it. I think we've got some better candidates, so we're going to remove that symbol. And now we're going to really hammer down. We covered that already. Covered CI already. McDonald's was one we were on the fence with. So the way that I would approach McDonald's is if you get a chance to buy the stock, it's got to be able to pull back to this 208 level, and I don't know that it will. You know, if we get a move like this where you get the breakout and it goes boom, boom, and then you immediately pull back, well, this is a nice entry point because you're right at that breakout and you can stop out and you'd buy it here, and then you start getting the move that you initially expected on the breakout. Kind of the same thing here. This 206 level, which I don't think we'll get back to as long as the market stays strong, would be an ideal entry point because we can keep our stop tight. So we're going to say we're going to enter at 208, pay no more than that. Even if the stock starts grinding higher and pushing higher and higher, we're not going to bite. We're waiting for that pullback to 208, and we're going to use a stop of 206 on this trade. MSI, a little bit of a high flyer. Let's zoom out. Yep, that stock's got nice momentum. That's really nice. It's been floundering around for a while, but now it's got a good head of steam. So technically it tells me that the company probably has its act together and is doing well. So our game plan for this is, again, I don't want to chase that 167.50 level. I would consider to be the prior resistance. That is now support. And we are going to try and buy around $170. It pops higher Friday, We're not going to chase it. 170 is our entry point. 167.50 on a closing basis, that is our stop. That's your game plan. PG, we like this breakout. Our entry point is going to be right around that 112.80 level, and our stop is going to be at the opening here, which is 112. So we don't have a lot of risk in this position, 80 cents. Again, that would be a close below 112. We're going to try and buy at 112.80, and we're going to see if we can have that stock grind higher for a little bit longer. That's our game plan. SBG, right here we've got a nice breakout. We're going to use that opening price right here as our stop on a closing basis, which is $55.12. We're going to call it $55 even. This is a stock on Friday that if the market is moving higher, it's moving higher, and the gap or the breakout today, we want to see that follow through. We want to see it try and go up and challenge this level right here. I like everything about it. Ahead of itself, pulls back, tests the breakout, riding the 50-day, moving higher, relative strength, has all the ingredients. So I like it right around this $56 level, and we're going to actually, we can use the 50-day moving average as our stop, a close below the 50-day moving average. It does kind of chop around, and it's got some tails, so it does move around a little bit, and it's riding that 50-day moving average, so use that as your stop. If you want to keep it a little bit tighter, then you can use this opening price, but I would say use that 50-day. And SNH, I was going to remove. So we've got 1, 2, 3, 4, 5, 6 really solid symbols. So the next video that I produce is going to recap those positions, and SPY 295 is our stop, and we also have individual stops on each one of these stocks. We want that breakout to hold on a closing basis. As the market moves higher, we want to see these stocks have follow through and continue to move higher. If you're able to make some money on these trades, if you're able to donate to my niece Ashley and my nephew Ryan, I'd really appreciate it. They would really appreciate it. They're trying to get their lives restarted. So thank you very much. God bless you.